Welcome everyone. How's it going? Hope audio's coming in clear. Today I have the pleasure of bringing on someone that I think a lot of you guys will recognize from the Tesla space. Been on lots of channels on Tesla investing, but more famously from Dave Lee on Investing's awesome channel on Tesla. It's Emmet Peppers. He's the founder of Good Soil Investment. And you might know him also from Tesla Twitter. He's famously turned 30K into well over $30 million, and now is founding a fund and doing investments. So I have the pleasure of bringing on Emmett. How's it going?
Good. How are you, Yashu? Good to be on. I've listened to a few of your shows, and I feel like you're making a name for yourself. It's good.
Right on. I appreciate that. Thank you.
Yeah.
Just before we dive in, obviously, I'm just going to give a disclaimer. Obviously, none of this is financial advice, and whatever Emmett and I say, it's not that you should take it verbatim or as an opportunity to buy and sell securities. Obviously, do your own research. Get in contact with the good folks at Good Soil if you want that sort of stuff. But right on, Emmett. So why don't we start just a little bit broad level? If someone's tuning on the channel, and probably a lower percentage of people will fall into this category, but if someone doesn't know who you are, how you got into Tesla investing, and kind of just a macro level story around that, if you don't mind.
Yeah. So I worked in the finance industry for the last 20 plus years, most of my career. And I started in like a back office type. Well, I started sorting bins of return to mail actually as a temporary worker at UBS investment bank, their headquarters in Stamford, Connecticut. That was brutal, but I committed myself to do it for a few weeks at least. And
Mm.
after a few weeks, they put me on a computer for some fancy data entry, and that was like a dream compared to sorting bins of returned mail. Like a whole office of bins and bins of returned mail was crazy. So
Yeah.
doing that 8 hours a day will just make you go nuts. So when I was putting in fancy data entry, I was like, all right, great, and I got good at that, and they promoted me to a full-time job, and then over time, I got promoted to like a sort of like what they call a middle office job, where instead of like in the back office, rooms doing like database management stuff, I was actually communicating with traders and clients and being like a middleman of operations type stuff.
Mm.
And so I got to see a little bit of what trading's like. And I've always been attracted to the stock market. And it just seems like a big game to me and I love games, like board games and such ever since I was a kid.
Mm.
I've always been good at math and numbers in certain ways. And so I learned a little bit about what institutional trading is like at that time. And then I tried to do some day trading on my own in 2006. I think I left that job. I worked my way up to like a kind of a managerial role in the middle office. And I was like, got a fork in the road where I could either go into be like a junior trader, like a training program to become a junior trader at UBS Investment Bank, or I could work my way up in operations, become a more senior level manager. Either of those forks were like 100 hours a week work, and I'm
Mm.
like 26 or 27. And I'm like, well, if I'm going to take a chance on something, this is the time to do it. And a friend of mine had been day trading himself at one
Mm.
of these like day trading shops in New York City. And I'd gone to see him a few times, and it looked like a dream job to me, because it was like the best way to describe it was like playing a video game and gambling at the same time. Like he was like, he'd look at the book of a few stocks all day long, and the order book, and he'd have like
Mhm.
level 2 quotes, and he'd, when a certain order came in, he could kind of front run it within milliseconds with like quick
Mm.
keystroke on an order on his keyboard to get in front of it for a few pennies.
Mhm.
And then as the order went down, it was basically trying to down tick a big short coming in. And back
Yeah.
then you couldn't short stocks unless it was on an uptick. There was the
Mhm.
uptick rule, it was called. So like you could only short stocks when the price was going up. You could have a limit order to short it, but you couldn't
Yeah.
short a stock on the bid to make the price go down.
Mhm.
But we had like a workaround, like a synthetic way to short the stock by buying a bunch. Like there'd be three stocks we'd follow. One was like UPS, one was FedEx, and something else.
Mhm.
And you'd at the start of every month you'd buy like 500 puts, 500 call. I can't remember the combination, but basically a combination of stock. You'd own the stock for the month and also buy
Mhm.
puts, so that your P&L will be even. You just have to pay the financing of owning the shares. But at any time during I'd own 500 shares and five puts, but at any time during the month, I could short 500 shares synthetically on a downtick, basically. So
Mhm.
it gave us an advantage. So you could quickly, when you saw a big short seller come in, you could quickly get in front of them by down ticking it before they could get their full short position
Mm.
done. And so if you watch closely, you can make,
Yeah.
$1,000 a day pretty consistently, but you have to be very patient. And it just seemed like fun, but I just didn't have the patience. It didn't work for me. I gambled too much and I started losing money after 6 months. And meanwhile, my friend was patient. He was making like, 500 to $2,000 a day consistently every day during
Uh-huh.
that time. And some days I make 2,000, some days I lose 2,000, and at my cost of living expense. So I realized after 6 months of that, I had to find a job again. And so then I found a job at Interactive Brokers, and Interactive Brokers was tiny at that time in 2006 or end of 2006, almost 2007. And I started in client support there, supporting their institutional clients. And that was like, at
Hmm.
the time, that was like small hedge funds still and high net worth traders or active day traders that would use Interactive Brokers in 2007. And so I got to learn, by being like the support person. Like I did everything. Like they'd call, ask how to put trades on, they'd describe a strategy. I'd say, oh, I want to do this options trade. How do I do it on the Trader Workstation platform? And I'd have to know how to walk them through it. So I learned a lot about different strategies from, sophisticated traders. And so from 2007 to 2010, I did that and
Mm.
learned a lot about the Interactive Broker systems and different types of trading strategies. Then I went over to sales. I kind of transitioned over to sales at Interactive Brokers from 2010 or 2009 to 2010 to 2020 when I
Mm.
retired last year. But for those 10 years, I also worked with a lot of startup hedge funds and high net worth traders that were moving to Interactive Brokers and such. And
Hmm.
so for those 13 years, Interactive Brokers, I learned a lot of different strategies that people use on exchange traded products, from stocks to futures to options, even for spot forex. People traded there.
Hmm.
Spot forex to me is like the least attractive thing to ever trade. I don't know who makes money trading spot. It's like super zero sum.
I
It's like
agree.
even
Yeah.
worse.
Yeah.
Yeah, yeah. We used to have this statistic they would put out and say like the brokers, the forex dealers would put out, and it would show the percentage of clients that made money. And
Uh-huh.
the closer when you have a bigger enough set of clients, it's going to be,
Right.
you'd think it was zero sum and there was no cost involved, it would be 50-50, right? So you could tell who was the most cost effective by who was the closest to 50-50. And Interactive Brokers was like 42% made money
Hmm.
and 58% lost money. But all the other forex dealers, it was like 28% or 30% made money and 70% lost. It was like way different.
Mm.
The costs, just drag down your performance on a zero sum game because there's
Mm.
brokerage or cost. So anyway, that was interesting
Yeah.
tidbit there. I remember. So like, and I remember there was like one client or a couple clients that made a fortune, doing options, leverage trades, and that kind of fascinated me and stuck in my mind all
Yeah.
these years, I think.
Yeah.
Um, and so, you have people doing fancy options trades, like selling iron condors, and
Hmm.
those people seem to make money consistently. But the people who sell options in general, at some point they get busted. They totally, they go kind of like bankrupt, or, there's a big anomaly in the market and it just screws their whole portfolio over at some point,
Hmm.
inevitably, it seems like. So, selling option premium, if you're not super, super careful about it, I feel like
Yeah.
that's just a death wish eventually. So that didn't sound so attractive to me, or didn't feel attractive because I'd seen that a few times. And anyway, then I discovered Tesla. Sorry, just to go
Yeah.
back to the story.
No,
I
it's good.
discovered Tesla like 2011. A friend of mine who worked in IT and I were
Hmm.
both kind of like techies. We like to have the first Apple iPhones and stuff. And we learned about, I learned about Tesla first, like a Motley Fool article I was reading about, and like an interesting trade idea for buying long-term options. And then we had gone to view a Tesla car at a prototype at a showroom in Greenwich, Connecticut.
Mm.
Me and my friend in IT at Interactive Brokers. His name is Dimitri, actually.
Hmm.
Maybe I'll have him interviewed on my channel one day. But we went to go visit, and we both fell in love with the interface and the look of the car. And it was just like, wow, this thing's the future. It just clicks when you see it. We didn't even
Yeah.
drive; we just saw it, and it was just like really cool. Like nothing
Mm.
like other cars look cool on the outside, but this car was like the future on the inside with that 17-inch
Yeah.
touchscreen.
Yeah.
And we played with it, and it was so instant responsive. There was no
Mm.
delay. It wasn't like, it
Hmm.
was software. You could tell the software was top notch in that. And so we just knew that was the future. So we started researching it like crazy. And I remember around that time, Fisker started coming out. And there was like a lot
Hmm.
of hype around Fisker. And I was never really bought into Fisker because I was really studying Elon Musk too. And you could just tell, like when you start watching his interviews, even back then, like you knew he thought about the world very differently, and his success with, PayPal and, SpaceX and the other stuff before that even. So you just knew he was a special kind of guy that was potentially world changing. And so the Fisker thing, there was Henrik Fisker and how he came out of Tesla originally was kind of rubbed me the wrong way. He was supposed to be a design person for Elon Musk, and he kind of stole design to start Fisker. That was just kind of like, oh, this guy's kind of snaky. And so
Mm.
I wasn't so interested in investing in Fisker, but some people would invest in Fisker. I remember too. I think it was an over the counter stock. Um, but Tesla was just my bread and butter to research. And it was like a super, like when I become infatuated with something, I think I remember being infatuated with Bitcoin around that time too, in 2011 originally. And I just started studying those things like crazy, like on my off time, like it was a second job. And,
Hmm.
my IRA account at the time was like $4,000. And I was like putting it all in Tesla options, long-term options, and with dreams of grandeur that eventually
Yeah.
worked out.
Yeah.
Eventually worked out, but it takes a long time for those dreams of grandeur to finally
Mm.
come true. But that's the beginning of my story, how I became interested in Tesla. And I know there's a ton of interview, and I'm happy to go through more. But I've been talking a lot, so
No, that's
yeah,
awesome. You know what I love really is whenever I talk to any Tesla bulls, the story always starts with the product for them. Often,
yeah,
right? And that's what I love
hmm
about Tesla is it's not like, oh, I was researching the stock and all the technicals were lining up and
yeah.
the RSI was really low. So I was like, you know what, let's just invest some money. And I mean, it's always the product, right? And going back to the product speaks for itself.
You're right.
It's almost like Apple in that sense.
Yeah, how did you first come across Tesla, Yashu? If you don't mind me asking.
Right on, yeah. So for me, it was the product as well. My dad is a really big Tesla bull, has been a really big Tesla bull. For me, I wasn't, there was portions of time where I would just believe a lot of the FUD that would come out with Tesla, and I
Hmm.
wasn't really giving it much time of the day. And it wasn't until my dad actually kind of dragged me to do a test drive in a Model 3.
Wow.
And we drove it and we went through. He actually made me drive it, and I was like,
Yeah.
I was like, no, this is your test drive, and he made me go
Yeah.
for it. And as soon as I hit the acceleration pedal, as soon as I put it into put autopilot on, like everything just clicked at that point for me.
The test drive. Yeah.
the infamous test drive, absolutely.
Yeah.
So
I have a
um,
funny story about my getting my first test drive. If you
mhm.
want, I
Go
could
ahead,
go.
yeah.
so, I started buying long-term options on Tesla in 2011. I think the first ones expired worthless, but I didn't spend the whole 4,000 in my IRA, and like half of it, and I rolled some. So I was able to buy more options that expired like 2013 or January 2013, 2014 as well. But during this time, they were started taking deposits for the Model S, right? And
Mm.
at the time it was $5,000 for deposit, and my IRA wasn't even 5,000. Like my wife
Uh,
and I, we were struggling, just living, hardly month to month with a little bit of savings. We had just been married recently, and first kid we were just was being born in 2012, and
mm,
we were trying to buy a house on a mortgage and all that, so we could barely. So it was like $5,000 scraping up on the side was not chunk change. It was like
mhm,
very hard to get. So I couldn't even get like approval with my wife to like put a 5,000 deposit on like an $80,000 or $100,000 car that she knows we could never afford. At
yeah.
the time we're driving like a Hyundai that's like 15 or $20,000. We're just getting by, and living
Mhm.
an all right life. And meanwhile, I'm trying to work on my dreams of grandeur of like getting a Tesla and like investing in Tesla and so forth. So I remember, I think it was 2012 or the last time I'm a big New York Giants fan, or I was back then when they had Eli Manning and stuff. I don't
Okay,
know if
yeah,
you're familiar
yeah.
with the football team. Well, the last Super Bowl run they had, and I like to bet on sports. There's a lot of
Mm,
interesting similarities betting on sports and the types of option bets I do in the market, I find. But
mm,
the last Super Bowl run that they had, I think it was 2011 or 12 or something. I uh, I realized like, hey, before the playoffs started, like the last game of the regular season was like a playoff game for them. Like they had to win to get in the playoffs, but I felt like they were getting hot, like they did the previous time in 2008 when they beat the Patriots. And so I was like, all right, I'm gonna put $100 down on the money line for them to win this game, and it was like. It was in their favor. It was like 50-50 or something like that. So 100 to 200. But then the playoff game, I'm like, and the first playoff game they're like favored to lose like 2-1, and the next
mhm.
playoff game they're favored to lose 3-1, and the next one they're favored to luse like 5-1, and then they kept winning. But made a commitment to myself to like keep putting double downing and putting the winning. So that $100 turned into $10,000 by
Oh
the end
man.
of when the time they won the Super Bowl, and it could have been much more. But the online gambling said I used offshore, like the maximum bet they let you do was like $500 or something.
Mm,
So by the end, I had to find all these like weird parlays that equated to like to mix and to put the whole like several a couple $1,000 on against the Patriots to win, where I got the $10,000. But anyway, I got the $10,000 and I was like, all right, I'm going to use 5,000 for the deposit on the Model S.
I
And
love it.
so basically like Eli Manning, sort of, I credit him in a way to
Mm,
like helping me get the deposit down, because like you, once I got the deposit down, I was insured a test drive like in a few months from them.
right.
And I went on the test drive, and my wife came with me, and it was just game changing. It was like,
Yeah.
wow, this is for real. Like there's nothing like this. Like it really increased my conviction. Just like
Yeah.
you know, I was already convicted, but when I test drove the Model S that summer, it was like, wow, we really have to do everything we can to position ourselves for long-term Tesla calls at this point. And so we
Mhm.
started like using our secret savings account, like cash, to buy long. I convinced my wife, and you know, she was on board, and it was risky because if it didn't work out, I'd be in big trouble. But
Mhm.
luckily, we were able to put like $20,000 or $30,000 of our, you know, we basically was our entire savings with the IRA into Tesla options and such, and it worked out over the long run at that
Yeah.
point.
That's awesome. You should tweet at Eli Manning and see if he's down to
I will.
uh,
I will. Once I can become more well known, where he'll like see my tweet, maybe I'll say
yeah.
thanks, Eli, for
Yeah.
my wealth creation.
I
Yeah.
love it. I love it. But you know what's it's kind of a struggle I face is not always does a good company and a good product equate to a good investment, right? So
Yeah, that's true.
it's funny because I totally get what you're saying. I was in the same boat, but like retroactively looking at it, it's almost like what is this just survivorship bias in a sense where it worked out great, but does that mean the next product I see is also a good investment, right? I'm
Yeah.
not sure if you want to touch up
Yeah.
on that a little bit. Obviously, there's more to it.
Yeah, yeah. So, you know, even though we scrapped up more savings. I was doing better at my job, so I was getting compensated better. So we could comfortably invest, you know, 20 or 30,000 by 2012. You know, end of 2012, going into 2013, we could invest more into Tesla. We scrapped up all our savings, but at the same time, like I kept in mind, like this could fail. Like
Yeah.
the product might be great, but it doesn't mean that the business or the stock isn't going to go bankrupt at some point, or you know.
Mm,
And so you know, I didn't, you know, I have a 401k with my job, and I had a good paying job that was going. So it was like I have a stock plan with my job at Interactive Brokers. So I had like a lot of safety nets. I just tried to create as much play money as I could to put in it, and then use that to Tesla.
yeah.
So I would not, like, if you come across a product or service that you think is the future, by all means, I think it's worth taking a gamble on it, and taking a risk on it, because
Mm,
that's when you make money, is when you feel like you're taking a big risk. But at the same time, it's so important not to like gamble your future. Like make sure you have
mm,
enough savings, and
yeah.
you have a job still, and you know you have whatever you have as a safety net. You don't use your safety net to take risk. You know,
Yeah.
you try to create like a play money pocket. Maybe lower your
Mm,
cost of living if you want. That's what we did. We didn't increase our cost of living, even though we could have, because I was doing better at my day job. We kind of kept it the same, but I was able to dedicate more of my savings then into this play money
mm,
bucket that I could put not Tesla options. So that's what I would suggest, because once you cross that line and are using like your safety net savings for a risky investment,
yeah.
then your emotions are always going to get the best of you.
Love it.
You
Yeah.
know, Tesla was very volatile for years,
Yeah.
and
Yeah.
you know, if I was using my entire savings, I definitely wouldn't have been able to stick with it as long as I did. But it was psychologically a separate, like, house money I was using, so it was easier.
What a great point. Yeah, exactly. That's exactly what kind of the same philosophy I follow is this is how I only play with house money if I can on options or leaps even. I mean,
Yes.
to a lesser extent. Stocks, I'm a little bit more flexible with. Like, I'll keep them closer to my savings. If I have to liquidate, I can, no big deal. But especially stuff that is has premium, is decaying, I just kind of leave out.
Yes.
Um,
Yeah. And I like the long-term options the most. You
yeah,
know, I did some short-term options last year that worked out well, but for things like product, you know, things that are life you think is going to be a huge future, the long-term options, like the Tesla long-term call, I was always trying to extend to have 2 year long options out. So even when my 2 year options became 1 year options, but the next 2 year available expiry came available, I would try to trade them in even for a higher strike price, because I was
mm,
trying to always trade for longer time horizon on this
love it.
thing, because I knew Tesla would win out in the long run.
Mm.
Between 2000, that was between 2013 or 14 to 2019, basically. Yeah.
Absolutely. Yeah. So much money has been lost on my end by just trying to time shorter term option stuff. Especially
Yeah.
weeklies, it's just burning your money at that point. Um,
Yeah. Yeah.
but
Yeah.
I know I wanted to get into kind of your why for a little bit, because obviously you've done quite well. Now you have good soil investment, and
Hmm.
at this point you're living pretty comfortably. what is like Emmett's why in terms of like what keeps you motivated at that certain point when you've hit that sort of financial success, which I know is not everything, but
Yeah. So that's a great question. Um, between 2010 and 2019, I was servicing hedge fund clients, and it just seemed like a really cool business to be able to run and be successful in. And my net worth was kind of creeping up from I did really well in Tesla in that first run up in 2013. Had like a million plus in my IRA, my IRA and personal savings account that I was still keeping dedicated to Tesla. I know I needed like 5 or 10 million to kind of like be able to retire from my
mhm.
job and start my own business and be very comfortable in like an expensive area to live and such. So that's kind of my target. So I was still waiting for Tesla to kind of appreciate further and get to that mark. And my dream was kind of either like start a restaurant or start a hedge fund. And I knew exactly how to start a hedge fund because that's how
Mm,
I work with so many hundreds of clients over the 10 years, maybe 1,000, I don't know, but literally hundreds for sure.
yeah.
And and so I knew exactly like the back of my hand, like the pitfalls of starting a hedge fund. Not like the investment strategy is one thing, but the operational aspect of how it runs, and how people overpay for certain, I knew that very well, and I felt like I could do it well. That was kind of my next level dream, to start a job, to get to the 5 million mark of net worth or something one day and be able to start my own little hedge fund. Because I'd seen people do that. People leave Goldman Sachs as an executive and start a hedge fund with a few million bucks they have saved up or whatever. And that type of thing had been, that's who I was servicing. And
Mm,
so that was sort of imprinted in my DNA of the next step for me. And it was interesting to me because I like the markets, and it's always been a curious thing and a dream of mine to just kind of play that game and do very well at it. And so then suddenly in 2019, uh, end of 2019, Tesla starts running up, and I'm like, wow, I'm getting close to doing well. And I'm thinking like, wow, like this, I think 2020 is going to be the year for Tesla. So I set up what's called an incubator fund, which is like, it's like a hedge fund, but a hedge fund that you only put your own money into.
mm,
I created that for January 1st, 2020, and kicked it off with just like 100,000 of my own savings, and pretty much put it all in like Tesla options, long-term options at the beginning of 2020. And I
nice.
kept some cash on the side. And then when COVID was coming around the end of January, I was like, oh, this looks serious. So my personal account and the incubator fund, I started buying put options on the NASDAQ index ETFs. And those worked out well. And I sold those, for like a 20 or 25x return near the bottom in April. And I waited for the market to settle a little bit. And then I bought in new long-term options with things like Square and Peloton and such near lows. And
Yeah.
those worked out well. So like all in all, it was like a perfect setup for 2020 for me, for my incubator fund. And my incubator fund went from 100,000 to over $13 million, with no outside capital coming, just to own
Wow.
$100,000. And my personal account, I wasn't quite as aggressive, but it went up 20x or something like that, or
Yeah.
15x over that not 130x, but it went up a lot, with Tesla positions and Tesla options and such. So, like you said, my net worth jumped like 3 levels. It didn't just go to 5
Yeah.
million. It went like,
Yeah.
it went up like 20, 30x, in a year. And it
Mm,
was like at a time when this coronavirus crisis is like all over the place. And
mm,
you don't know how serious, like in the first half of 2020, we didn't really know how serious this
yeah.
was, how many people it's going to kill, what's the long-term consequences of getting it, are you going to die like a year later, no one
Yeah.
really knew. A lot of uncertainty, so it was kind of a scary time. And I really prayed about it, and thought like, what am I going to have enough money? I shouldn't be working for someone else, but I have so much money, starting a hedge fund just to make more money doesn't seem appealing to me. Like,
Yeah.
what am I going to do? And I really wasn't sure for a while. It was kind of scary, and not scary. It was like good to know I had all this money, but at the same time, it felt like the world could be ending, and you just don't know. Like, oh, I made all this money
Mm.
now, when the world's ending. Great, so so it was scary. But I thought about it, and I was like, well, maybe if I do have some unique God-given skill to spot
Yeah.
opportunities other people don't see now, I should use it for good, not just to increase my own wealth, but I should try to use it for something more to improve society somehow. And so then I thought about it. I was studying for like a Bible group for my
Mhm.
church, men's Bible group. And I was reading the parable of the sower. And it was like the seed that
Mm,
falls on the good soil has like 100 times return. And it was just like hit me. And I was like, this sounds like my investing strategy. I look for these like 100x return opportunities a lot of times. And I slept on it and prayed on it more. And it
mm,
wasn't like an overnight decision, but it just felt more and more right to me as time went on. I was like, I'm gonna set up the hedge fund, and I'm gonna change the structure to have a charitable component to it. So in the hedge fund structure, I wrote that, half of the management and incentive fee performance fees go to charity.
Mm.
And so, other hedge funds, they do give money to charity, but very opportunistically for like branding reasons. They go to like hedge fund cares or other events, and they
Mm.
might give like $50,000 to some event to get a name of a parking space at San Francisco Giant Stadium or something like that. But it
Yeah.
looks good for their branding. But really, what you don't know is that $50,000 is like 0.1% of the fees they've taken for the year,
Mm.
because it's like multi-billion-dollar funds.
Hmm.
So the hedge fund industry by itself, is pretty greedy. And so I wanted to change. I'm trying to change that. And capitalism is really under fire with the younger generation,
Yeah.
and Wall Street. Everyone's protesting Wall Street, and I wanted to change this. There's already a trend. There's other people that try to give back, and so I just want to contribute to that. And maybe if I can be a really successful hedge fund manager, and I wrote into the prospectus of my fund that half the fees can go to charity, that maybe I can contribute to a trend in some way where more and more investment managers over time write into their prospectuses that X% of their fees are going to go to charity. And
Yeah.
so maybe it's like an ESG trend, but now it could be like a giving back trend that picks up steam over time. And instead of being taxed like crazy to the government or trying to evade, you're actually giving to charities, to causes that improve society in ways that that without the government being the middleman. So
Yeah.
it's just a much more efficient use of capital too. I think giving to charity versus paying taxes, the dollar for dollar. So it just seems like the right direction to go for capitalism to evolve. And so it just felt right to me, and I thought about it a lot. And
I
so that's
like
what I've
it.
done. That's what keeps us. That's what keeps me and Matt, my partner, and
Yeah.
everyone on my team, really driven. Is that we don't want to just make money. I mean, sure, we want to make our investors money and such, but we really want to change, the industry and capitalism a little bit to be a little more friendly and giving back to, the
Mm.
most successful people that have cash give back. Like Elon
Yeah.
Musk, he's a billionaire, yeah, but his money is in stock. He's not going to give stock to charity,
Yeah.
like, but like people who like hedge fund managers who generate a ton of cash and fees, why not give some of that
I
back
like it.
more aggressively? That's my thought.
I like it. Yeah, that's awesome. It's very noble. It's a noble cause that you're going after. And the interesting part with that almost is you're going to attract a group of investors that particularly seek out something like this, but probably can't find it. Right? I'm guessing you're
Yeah.
probably one of the like it's for me. It's and maybe it's because I live in a bubble. I don't know anything, but it
Yeah.
sounds like this is one of the first of a kind in the hedge fund space.
Yeah. I researched it a lot actually going into it. And, I learned that there's another fund, like a mutual fund company called Bridgeway, and they do something very similar for their mutual fund business. They give 50% of their revenues or profit to charity. And so, I talked to them and got some insights from them. And so, I'll be talking to them more as time goes on. So there's a few other companies that do it,
Hmm.
but it's not well known, but I think if you get one of these firms that becomes very successful, like, ARK Investment has become very successful because of their performance, right?
Yeah.
So if Good Soil Investment Management can start becoming more successful, it would have to be because of its performance, of course. And so at that time, the charitable aspect, I think, gets more exposure, and maybe more startup emerging managers want to try something similar. And they're like, yeah, I'll start my hedge fund like Good Soil and put, send 20% of my fees to charity or whatever it is. But it's just like an extra feel good check mark that investors can have when they're investing in your fund or whatever, I think. Yeah.
Right on. Right on. Perfect. And so, talking about your investment strategy, let's say in Good Soil or in at a personal level, even obviously you're still bullish on Tesla longer haul. What's your kind of general thesis with Tesla? Let's say in the shorter term, let's say, and there's this whole stock split kind of theory. I saw you tweeting
Yeah.
at Gary Black about it yesterday. So if you want to talk
Yeah.
about maybe that and your shorter term
Yeah.
bet there, and then longer term thesis, what you think about Tesla.
Yeah. I mean, short term, I really don't know of any big catalysts for Tesla to go up, but something that historically, that almost seems like the time when it does go up is like when no
Yeah.
one's really expecting it. That's when it starts creeping up, like 20 or $50 a day for several days in a row, it feels like. And, there's like the calm before the storm is when the storm happens or so. I don't know what it is.
Mm,
Just historically knowing Tesla, but things are different now. That's part of the S&P.
yeah.
I don't know how that works now, but um, the short term S&, I did, Gary Black has, and I've also been on the record saying I think there's a higher chance than people think that it would split again.
Mm,
I don't think it's probable, but I think it's significant enough not to, you know, not consider. I think you got to think probabilistically, and a lot of people have a hard time doing that. I think if you use options, you really have to think probabilistically, not in a binary way, like yes or no, one or zero. You have to think like, okay, what's the chance of this happening? What happens if that happens
Mhm.
versus not happening? How does that play out? So I put out like, I think it was 800 calls for Friday next week of expiration for like 80 cents or 82 cents I bought at the end of the day yesterday.
Yeah.
And I didn't buy a lot, just a few. I'm sure they're underwater still right now because the stock hasn't gone up like, 715 or 710 or something like that. So that's to get to $800 plus by the end of next week. So if there was like an announcement of a stock split last night or tonight or tomorrow night, for example, I mean, I could certainly imagine the stock going up, $50 overnight at least, and then creeping up another 50 or $100 over the next several days after that. And in that case, I see like, a 25 to 100 times return. And so for 80 cent
Mhm.
for what I think is like a 10% chance maybe of happening, 10% isn't probable by any means, but it's like 1 in 10 years, something like this would happen. Yeah, I think that's just, I would take a stab at it. So it seems like enough to put like, 0.1% of my portfolio into a trade like that from time to time. It's like
Mhm.
it's not really much. I just throw a little flyer out here and there and things like that.
Mm.
And I don't expect it to win. I feel like I'm losing money, I'm going to throw that money out, but it's a lottery ticket in my favor, I feel like.
Mm.
And occasionally those work out and they can prove to be well worth, 10 losses in a row. You get that the 11th one that works out, and
Yep.
suddenly you get 100x return on that, and it's pretty good. Overall it's a 10x return on all the times you've tried it.
Yeah. I also like, by the way, how you didn't buy options for expiring this week, right? That's such a it's such a rookie mistake that I often see, and everyone makes it. But buying yourself
Yeah.
that extra week almost ensures
Yeah.
that anyone that's going to be buying post announcement, should there be an announcement, is not going to be
Yes.
buying this Friday. They're going to be buying your position, so increasing the implied volatility in yours, right?
Yeah, I'm a big fan of that. Like increasing my optionality with some extra time. Like for the S&P 500 trade last year that a
Mm.
lot of people know about. Like I did the same thing. I bought the January, 20th expiring options or something, even though the S&P inclusion was announced and it was going to happen like December 22nd or something. I didn't buy December 25th expiring. Like you said, I think it's very important to have the extra time value optionality because there's a lot of people buying post
Yeah.
whatever the announcement is, and a lot of speculation happening after that too. And you can still sell it at the expiration time. Like I could have still sold my
Mhm.
S&P, the Tesla call options on December 22nd for a nice profit, but I just felt like there was a lot more chance to run up after that and kept it.
Yeah, and if we've learned anything from last split, it's that we're gonna have time, pardon me, for a run up. It's not gonna be a 1 day move. If Apple was indicative of what happened post split last year, Tesla obviously it potentially can run for a while. It's not just gonna be for that said day. Um,
Yeah, yeah, yeah. I mean, that's what and that's what's scary too, because it seems like a sure thing. Like if they announce the
yeah,
split, it goes up $50. Like
but you
it
never
seems
know.
like, oh,
Yeah,
it's a sure thing. It's going to run up another $100 the next
yeah,
week or two or whatever. But that could be the time where it does the opposite. Maybe it goes up
absolutely.
$100 and drops $50, and because the market seems to always do the opposite of what the most people think it's going to do. It feels
Mm.
like.
100%, 100%, and that's why we deal with not binary black and white, but odds and really, and everyone has their own risk reward, right? Obviously, you have
Yeah,
you're more comfortable with the greater risk than probably most people might be in their position. So definitely do your own research on that. So
yeah,
you talked about selling premium not being attractive to you when you were first getting into the industry. Now that you've accumulated probably a lot of equity, a lot of delta on Tesla, do you consider covered calls a strategy? Do you consider selling premium short on any names that you particularly like? You want to, let's say GME, AMC, something that's really run up. Do you look for
yeah.
those type of selling premium moves?
Yeah, I mean now I have like three accounts. I have my IRA account, which has gotten pretty big, and I have my personal trading account, which has gotten pretty big, and then I have the hedge fund account that me and Matt manage, and a few other guys help us with, in terms of operational stuff. And we have investor capital in there. Over half of it's my capital. It's around like 20 something million now. But that's the account we practice, our investment philosophy in, or and in that account I'm actively doing stuff, and we
Mhm.
are selling premium on things. We did, we felt like the run up last year was, not going to happen again necessarily this year. We thought some maybe big growth tech stocks might do well, but We wanted to sell premium, and we've been selling some covered calls on things, whether it's the Peloton we hold in there or other things. For Tesla, for example, we don't like selling covered calls on Tesla just because
Mm,
we don't feel like we're so bullish on Tesla,
yeah.
and it's so highly valued at like 700 billion market cap, obviously. But we think it get to like a trillion market cap pretty quickly anytime now. If some big announcement happens or some big buyers come in, it's just yeah, and the money, the implied volatility on the Tesla call options is not high enough to sell.
True.
We don't want to buy it either. It just doesn't seem attractive enough either way. So what we're doing actually with Tesla, which we talked about in some of our YouTube channel chats, is that we sold a bunch of long-term put options
Yeah.
on Tesla. So we sold a bunch of we converted a lot of our stock position that we had at the start of this year into long-term puts. So we sold 1,000 strike June 2023 puts for like around $500 a contract. Now they're around $400 or 420. So it's not as attractive right now as they were when we sold them, obviously.
Yeah.
But we sold them with the idea that in June 2023, the only way for us to lose on that trade is if Tesla was trading below $500 a share. That's 2 years from now if Tesla's below $500 a share. And if Tesla is over $1,000 a share, then we keep that whole 500 premium for ourselves, right? And the amount of capital we had to put up, to secure kind of a comfortable margin requirement on selling those puts relative to owning the stock
Hmm.
was like 2.5 or 3 to 1 per share. So
Yeah.
for the amount of capital we used for holding the shares, we could use that same amount of capital to sell 2 or 3 times as many put contracts, if that
Mm.
makes sense.
Yeah.
So
Okay.
basically, if Tesla goes above $2,000 a share, we worked it out so that if Tesla went above $2,000 a share by June 2023,
Hmm.
then we would have made more money if we just owned the shares outright and
Yeah.
held on to them. But
Yep.
if Tesla's above $500 a share, we make more money selling these puts,
Gotcha.
and
Yeah.
so that's how we thought about it.
It sounds like there's less management on that trade than holding equity and then
Yes,
selling covered calls, so you probably save some time, as well
for
there.
sure.
Now, yeah, I guess the only risk you run with selling premium there is that if Tesla goes bonkers again, right, in the next couple of years and doubles, triples from here.
Yeah, and we at the same time, so we did use like 2 to 1. We did like double, and then we also put in some long-term call options, like June or March 2023
Okay.
long-term call options. So kind of offsets that to some degree, but
Ah, okay.
um, yeah. So we did a kind of a thing like that where 2 trillion market cap is pretty high. Like for it to
Mm,
get to that, like they'd have to really deliver on the full self-driving robotaxi, and they probably will, but I don't know if they will next year or the year after or the year after that. It's hard to say.
mm. And we should probably add, like, whatever decisions you're making here with your fund are going to be so radically different from what a retail investor might want to do, because you're not only optimizing for return, but you're probably optimizing for time efficiency when you're making those trades, right?
Yeah, yeah. I mean, when you mean time efficiency, what do you mean by that exactly?
Like active trading time or investment strategy. Like a retail investor can pivot probably a lot faster in their strategy than maybe a fund can.
Yeah, that's true. I mean, we have positions that are pretty large sometimes. Like there's a position we're putting on right now that we really like. I mean, we haven't disclosed it.
Hmm.
I feel like it has potential to be a big trade for us, but it's very illiquid and it takes a long time to get into this position for like
Yeah.
$1 million plus, versus if you're
Mm,
retail, like when I was had a $5,000 IRA account or whatever, I could get in and
yeah.
out of those positions like that, no problem. So
Exactly. Exactly. Let's pivot to AI Day on that kind of note. So, what are your thoughts on AI Day? It's coming up here in the next week or two. Are you on team robotics and disrupting human labor? And if so, give me your thoughts kind of around that.
yes, I am. I think robotics is a big deal. I think the real world AI that Tesla is building out is going to play a large role in the future of robotics. I'm hoping that there's going to be some really cool demo,
Hmm.
just to showcase like the potential of combining robotics with real world AI. Um, and I don't think it's necessarily going to be a demo of some like mass produced product, or maybe just a demo of what things are capable of doing,
Right.
coming, to spur imaginations further and show the vision of where Tesla's going to. That's the purpose, is to recruit with this AI day. The purpose is not for investors.
Yeah.
It's not for selling something, a product. It's to inspire, the next generation of engineers. That's what the purpose is, and have them come to Tesla.
Mm.
So for that reason, I think there's a high chance there'll be some really cool demo of some sort that is going to do that. And so I hope there's some kind of really cool robotics demonstration. And like I was talking to my wife just yesterday, and we just put a little garden in our small little backyard of our house, and she's planting some strawberries, and we have cats that go out and like to use the soil for their litter
Yeah.
box, and so we're trying to put something on top of it. And then we have a raccoon that comes and digs up
Oh, I have that
our
too.
yard. Yeah. And so we're like, man, how do we get rid of this raccoon? We don't even know. And I was thinking, maybe we get one of those like a Boston Dynamics robot dog to like monitor the backyard or something, you know. And so there could be all kinds of use cases for these robots. Like I could get like a little robot dog that just goes back and forth in their backyard to make sure no raccoons are going in there at night, or
Yeah.
scares any potential like robbers. Like, what the heck's that robot? I'm not going to that house, you know. so so there's all kinds of interesting use cases for robots, for cleaning things, to changing chargers at the charging out. There's going to be a lot of I got a solar roof put on my house, and that took a
Yeah.
lot of effort and manual labor, but maybe you can get robots to do some of that. So it's going to be interesting. What are your thoughts on the AI day, Yashu? What do you think is going to happen?
Yeah, those are all lovely ideas. By the way, I think the robot in the backyard is such a first world solution. I can imagine talking to people in the third world about that.
Yeah.
We just put nematodes, by the way, on our lawn because raccoons were going through it. So maybe you should look into nematodes. For the
Nematodes. How do you spell that?
Nema, like the Nema plug, and then just toads,
Okay. Okay.
TODES. Yeah.
Okay. I'm going
Um,
to do that.
so with robotics, I mean, my initial guess would probably be it's going to be around manufacturing, right? I think Elon has said multiple times that the limiting factor, other than maybe batteries, is probably human capital on Tesla. Being able to recruit, like you said, is going to be
Yep.
a main priority with this event. Do you think Tesla could potentially run like Tesla's already running such a lean manufacturing system in places like Shanghai and going to be Austin and Berlin soon enough? Do you think they're like what kind of step change do you think is even possible with robotics in the manufacturing plant, in your opinion?
Yeah, I mean, I think that's the biggest value near term is the machine that builds the machine that Elon talks about a lot, is building custom robots instead of buying them from, I forget the Japanese company they buy a lot from, but some other companies they buy the robots from that they have to program to like make the maneuvers to put the car together.
Mhm.
They'll just build their own custom robots, and their own custom robots will be more autonomous and be able to work with the manufacturing process Tesla's designing. So it'll just be so vertically integrated together.
Mhm.
It'll just be like the machine that builds the machine, like comes to reality, And so I think that's the most beneficial aspect of the real world AI near term.
Mm.
Whatever consumer products that come out are going to be cool too, and
Yeah.
hope we see stuff about that on the AI day. But definitely the robots, the machine that builds the machine.
Yeah, maybe even a third derivative of the machine that builds the machine that builds the never mind. Okay.
Yeah, could be that too. Yeah.
I mean, I guess around real world AI and all of the data Tesla's collected, like the real street world data Tesla has collected now, it's the biggest data set in the world. Probably one of the most unique, obviously, with the amount of data that it has. Do you think that would particularly be used in the robotic systems that Tesla would build in the manufacturing plant, or would this be not really integrated with that sort of data set?
Yeah, I mean, I think the data sets will probably be very different, but I think the process they're building is what they can replicate. With this Dojo computer, this chip they have that's on the invitation, they're building a framework. I feel like
Hmm.
for that they can employ elsewhere very easily. So the framework for solving real world driving, self driving, that framework can then be, whether it needs to be modified substantially or not, can be used, I think, to for other real world AI issues, using neural networks and such. So
Hmm.
that's the idea I get. I mean, Dave Lee and I had an extensive interview with George Hotz. I'm not sure if you
Yeah,
saw that.
I did. Yeah.
And Dave's done a bunch of interviews with James Dalma, and I've talked to James Dalma. So just from all the information I've taken in, it just feels like they're building a foundation for real world AI, neural networks that can be applied, quickly and easily to
And
things.
And more of a broad solution too, which is awesome because that kind of leaves the door open for everything else. What is your timeline? I know you've talked about FSD a lot, and your team FSD with Tesla currently being able to solve FSD. Let me know if that's changed. But what's your timeline on FSD, and do you think it's being priced into the stock accurately right now, or too much, or too little?
Yeah, I mean, I think there's a lot of like, if I put it this way, if like something came out that said, okay, Tesla Autopilot cannot go any further. This is, some announcement came out that Tesla Autopilot's as good as it's ever going to get. It's never going to be fully autonomous, and you can still use it for highway driving like you do today, but it's never going to get any better from here.
Hmm.
Just going to be like this. I think the stock would take a hit. I don't know if it would be more than $100. Maybe 200. I don't know, but it would take a certain hit. So there is some premium built into the stock on expectations. I think that full self driving is going to come to fruition with Tesla. How big that is, I'm not sure, but there is some premium. Now, when it materializes, I think that's a process that can take, when it materializes, it's not like a moment in time.
Yeah.
It's more like a year or 2 year. When you zoom out, it'll be like a 1 or 2 year process.
Hmm.
And whether we're at the beginning of that 1 or 2 year process now, where it's sort of materializing with this new vision only upgrades and such, or whether that process is going to kind of begin once they get comfortable enough to go to wide release or whatever. It's hard to say, but when you zoom out over that time period, I think by the end of that process, by the end of that 1 or 2 years, when it's very clear that Tesla sell full self-driving and robotaxis are a thing, that I think there will be 500 billion to a trillion of market cap added to Tesla's stock valuation from where it is now. So it's just a matter of when, hopefully, and not if.
Yeah, absolutely. And it's likely probably not going to be, it's probably going to be China first in terms of the coming out. Because I think a lot of the infrastructure that's being built in China, a lot of the road work is kind of front running a lot of full self driving stuff to come out. What are your thoughts on where do you think, and if in North America is your answer, where do you think in specifically United States?
Yeah, I mean, I think Tesla's self-driving is sort of known to not be so good in China yet. Maybe they can change that, but I feel like they built it for the US primarily. In Europe, it's like not really good either. Or it's not even allowed in certain places, I think.
Hmm.
So in the US is where it's like primarily used, or that's where they're working with. And I think there's going to be certain cities, whether it's like Miami or Scottsdale, Arizona, or something like that, or Austin, Texas, or there'll be certain cities that are friendly to new technology and trying to attract new industry by allowing
Hmm.
self-driving cars for Tesla sooner than other cities. And my understanding is a state by state thing. So I think that's the right path, is first Miami and Austin. And then once it's shown to be working well there, and there's like new industries popping up because of robo taxis, then other cities want to compete and offer it. And statistics show. My only real risk is that there will be, a first couple autopilot, full
Hmm.
self-driving deaths. We won't be able to easily see the 20 lives it saved before those first 1 or 2 deaths. So there won't be news coverage of the 20 lives it saved, but there will certainly be a lot of news coverage of the first 1 or 2 deaths that occur with full self-driving robo taxis, and those will probably video and make national headlines. And depending on how
Hmm.
ugly it is and bad it is and how much outcry and what the news cycle is at the time, I'm worried that there could
Hmm.
be like emotional public outcry where
Yeah.
legislators make some kind of national law to like ban it entirely until they investigate, and that could
Hmm.
take years with lobbying pushing to delay it and such. So
Yeah.
that's my big worry, is things get cluttered up. But in that case,
Yeah.
I think if they've done, they can already ramp up in other countries, maybe China by that time, maybe some other countries that aren't as crazy with the regulations and understand that, statistically it's saving 10 times as many lives. So
Yeah.
by that time, I'm hoping the global presence of Tesla will be a big benefit.
Yeah, that's definitely it's a concern that I share as well. Obviously, Tesla is going to try to optimize for zero fatal collisions or even accidents, but it's just, I guess, law of large numbers, that's not possible.
Yeah, it's inevitable. It'll be some at some point. Yeah, yeah.
Um,
And just God forbid it's not like something really crazy, like running
yeah,
over a baby or something. It could be,
yeah,
who
yeah.
knows? But that stuff happens every day with real world drivers,
Human
right? But we
drivers,
just don't
yeah,
see news coverage of it. But the first time you see like a robot taxi
yeah.
driving over a baby, it's just going to cause so much
Oh man.
outrage. It's crazy.
100%, 100%. Yeah, it's definitely hard to mitigate that risk. By the way, are you team a PR team, or Tesla should have a Gary Black is famously team pro PR.
Yeah,
Are you
I
anti or
am.
pro?
No, I think they should have some kind of minimal PR at least, somewhere where I think they should have like their own like PR Twitter or something that's like more open source even.
Huh.
So like when reporters have questions about an incident, whether the Houston incident or whatever, then they can tweet to that, PR Twitter for Tesla, and Tesla can tweet a response, an official like response from Tesla that all reporters can use then, because I think probably part of the hassle of having to appear is manual. You have like one person and all these different reporters can place their contact in that person. They have to like respond to them. But I feel like they could use Twitter, kind
Mm,
of open source that and make it more efficient for everyone to see, so that things don't get,
hmm.
misguided. Reporters get one thing, then they frame the story a different way with the quote, but the story headline says something different, and then
Yeah.
someone else picks up on that, and it just gets to be a headline that most people will click on, which is the most fearful headline possible. It's just crazy.
Absolutely. Yeah. And by the way, I really like that Twitter handle that you shared, I think a couple months ago now, about Tesla saving lives. That one
Yeah, at saved Tesla. Yeah,
at Saves Tesla.
yeah,
That one's
yeah. They
awesome.
have like 6 or 7 thousand followers. I would love it if they got to like 100,000 followers, because that's so important. Yeah,
Yeah, and I've seen it myself, and I know there's a lot of detractors when it comes to FSD, and it's too risky, and it's not actually full self. I think the biggest gripe with a lot of bears is that it's called full self driving when it's not yet. Whereas we don't consider it the done product; it's a beta, obviously. But I've seen it with
yeah,
autopilot. I don't have full self driving, but I have obviously every car comes with autopilot. Even autopilot, like the other week, someone was changing in my lane. They're coming right in, autopilot swerved to the right. It was
yeah,
kind of a jolty, but it was there. So I've seen it firsthand. Whereas I feel like if you haven't tried the product or if you haven't driven autopilot enough, you probably don't get an idea of that.
hmm,
But on one respect, I do consider it a good thing, in my opinion, to keep Tesla's feet under the fire when it comes to full self driving to maximize safety. Because I think at the end of the day, the goal for everyone, Tesla bulls, Tesla bears, hopefully at least the honest ones, should be safety and long term success of
yeah,
auto of driving, right? And
absolutely.
and with that goal, we should really be on the same team. So it's just a matter of really figuring that
Yeah,
out. So
saving lives. I mean, I think a car
yeah.
crash is maybe the third leading cause of death in the U.S. after cancer and heart disease. So
Oh wow.
we can cut that, just by owning a Tesla, you can cut that by more than in half. So I always tell friends of mine, like, you should buy it. You should pay a little extra for a Tesla, because, you're going to
Mhm.
save your third leading cause of death by a large, you're going to cut that in half or more probably. So it just makes sense. And then, when the full self-driving,
Mhm.
when they get better with that, the FSD, it'll
Yeah.
cut it by 90% or 95% probably. So it's just a tremendous benefit to society. It's unfortunate that the few deaths that are caused are going to become magnified so much, so that people will lose that statistic or that mathematical,
Yeah.
increase in saved lives.
I absolutely loved actually when you tweeted that as well, because that's the same way that we kind of considered the purchase of our Model 3 was okay. We wanted to get an EV, and we actually had a Nissan Leaf before. We test drove the Bolt and everything like that. And it was
Yeah,
at the end of the day, if you put everything aside, economics and supercharging network and all the other boons, and you just focused really on safety and crash tests and all this sort of stuff, it was a marginal amount of money more to pay to really just have additional safety while we're hopefully using the car as much as we possibly can.
yeah,
That's the same way that we
yeah.
looked at it as well.
Yeah. Yeah, and people forget, they're like, "Oh, I'm a safe driver," but it's not about you. Like, there's lots of drunk drivers or irresponsible drivers on the road that can hit you, and you have a much better chance of surviving in a Tesla than any other car.
Hmm. Right on. Perfect. So switching gears here, let's go and I know we probably have to wrap up soon here, but I want to get your kind of just overall thesis on the macro environment with Delta cases rising and inflation, and no one really knows what general direction the market's going to go in, obviously. But I'd love to get your take on just the macro environment.
Yeah, I mean, I think the Delta variant is like, the news headlines are just, Matt and I were talking about this yesterday on our Good Soil going live channel,
Hmm.
weekly chat or whatever. But basically, I think the news cycle is is probably just going to go as haywire as they can with this, get as many clicks as possible, and make it seem as crazy as it can. But in reality, I think this Delta variant is really more like a common cold to everyone who's been vaccinated. And even to the people that aren't vaccinated, it's still serious, but we have much better treatments for it. And I think I don't know for sure it's less lethal than the original COVID, but there seems to be some law within viruses that the more contagious they become, the less lethal they become at the same time. I don't know if that's true, but it seems to be general law of viruses of some sort. And it doesn't seem that it's more lethal, that's for sure.
Mm,
So I think if enough people get vaccinated, it's really a non-issue. The
mhm,
people that are choosing not to get vaccinated, they're risking serious sickness, but we have much better treatments for it. I
mhm,
don't think it's going to be nearly as bad in terms of deaths as the last wave. But the news headlines are going to try to create, they're not intentionally trying to create panic. Sort of they are, but basically they're just trying to sell clicks. And the way to do that is to bring upon
mhm,
panic, where people click on their headlines and
mm.
they feel like they have to, out of panic, to understand what's going on. Our brain is hardwired to figure out what fear to be worried about, so that lions don't eat us or whatever.
Yeah.
So it's unfortunate that human nature makes us click on this stuff, but we will, and hopefully decision makers and politicians don't seize on that power grab for creating more mandates of masks and school being shut out by teachers unions and such. But ultimately, I think by Christmas time, by the end of the winter, it'll be long gone, and
Mm,
probably by Halloween, it'll be gone, in my opinion, or
mm.
maybe even in a few weeks. So yeah, I
Gotcha.
feel like we're a few weeks behind the UK, and the UK is mostly is on the way down. And I think we even have. I think I tweeted something yesterday, like a signal that it seems like the weekly cases being reported in the US is starting to. It seems like it reached its peak and might be coming back down eventually, finally.
Yeah. Yeah, I
What
agree.
do you
And
think?
I share pretty much the same sentiments. I think in nations, or I think it's more of a localized problem now. I don't
Hmm.
think it's a federal issue. I don't think it's a national issue. I don't think it's something that should be done at a higher level of government, but more a local health authority. With areas with greater than, let's say, critical mass, 75% vaccination, full vaccination, I don't think it should be a long term issue. I think the one problem is, in my opinion, with media is that it leads with case numbers. Whereas I'd rather know about hospitalizations because I think that's the factor to look at now,
Yes.
right?
Yes.
Not cases.
Yeah.
Right on. And wrapping up here, I know you're busy. I appreciate your time. I got some rapid fire questions, a couple of them here.
Yeah.
So
And
we'll
just so
get
you know, I'm
into it.
happy to do a part two interview with down the road. I just have to
Right on.
go in about 15 minutes, 10
Yeah.
or 10 minutes or so. But I enjoyed chatting. We'll do a chat again sometime. But yeah, let's go to the rapid fire questions.
Perfect. Perfect. So number one, well, what's something that you believe, but the majority of people around you do not?
Hmm. So I would say diet. I
Mm.
think I mean, there's a lot of people that are probably gonna I think vegetables are not necessary.
Really?
I agree. Yeah, I think you could live off 100% carnivore diet and very healthily if you wanted
Interesting.
to. I think our ancestors did something close to that. When I want to eat, when I want to get healthier, like if I want to lose weight or get healthier or whatever, I just go closer to get. I enjoy vegetables. Don't get me wrong. I like the seasoning. I like some of the flavors, and I've done very low carb stuff. But
Mm.
late in the last few years, but I've kind of come full circle that we don't know anything about human health hardly. Westerns, like cholesterol, such dogma, for
Mm.
example. Cholesterol is associated with heart disease, but I don't think it's a cause. It's like saying police are not the cause of crime, or ambulances are not a cause of death, but they're associated with death because they show up when someone dies. So
Mm.
I think there's a lot of in health epidemiology. There's so much correlation that does not equal cause and effect, but articles get written and people go with things, and there's so much money to be made in different drugs. It's just so tragic, the obesity epidemic in our Western society, and
Mm.
to me, that's a much bigger story than COVID or the last 30 years in the US, especially, the obesity epidemic, especially among kids. It's so sad. So
Hmm.
To me, that's something I care deeply on, and my foundation is trying to pay special attention to. Actually, it's giving the charities the help, nutritional guidance, and such. Because those are the sources of a lot of health issues. You can donate to, put more dialysis machines into a hospital to treat people with severe diabetes, or you could donate to try to prevent diabetes from happening. And so that's sort of what I believe. And unfortunately,
Hmm.
I think, I don't think doctors' intentions are bad. I think doctors have good intentions, but I think the knowledge being given to doctors on nutrition and such, especially, is terrible.
I agree with that. It's pretty ironic because you're talking to a vegetarian who's been a vegetarian his whole life, and
Sorry.
no, you don't have to be sorry.
I think you could live a vegetarian lifestyle much
it's
healthier than. I don't think it's necessarily a bad thing. I just don't think it's necessary,
yeah.
but you could. But I think meat is sort of. I think over a long period of time, it's
No,
a
I get
risk
that.
not to have any meat. But anyway, go on. What you're saying?
That's I mean that's interesting. I'll definitely look into. I've never actually purposely had meat in my life. I've never eaten meat, so ever.
Okay.
So,
Wow.
yeah.
Wow. I
Uh,
met one other person that was like that, and they seem. I think the human can adapt to different diets for
yeah.
sure. But and your microbiome changes based on what you're eating, but it can take a
Mm,
month or whatever more to have it change and adjust. But for people that have like big health issues, I feel like if they go kind of on a meat only diet, it
mm.
often solves a lot of their health, some certain health issues that seem unsolvable otherwise. But
Interesting.
anyway,
We're gonna have to chat. We're gonna have to chat offline about this.
yeah.
What's one thing, Emmett, if you were to talk to your future self in 10 years, so let's say 2030, that you would think you'd be most wrong about? And what's one thing that if you were to see yourself in 2030, that you think you'd be most right in predicting?
I'm most wrong about health because I feel like I've gone like a 180 on health many times in my life. So I feel like, maybe in 10 years I'll be like, wow, maybe, we should all be eating cardboard. Yeah. Who knows? It'll be crazy. So, I feel like that changes a lot. I feel like I'm on the right path somewhat now with health, but
Hmm,
that changes. I'm always studying. I'm always interested in having a healthier lifestyle. So I'm always open to new ideas and changing my thoughts and trying things differently myself. So I'm sure that'll continue to change, whether it's with exercise, sleep, or right now I think you got to get a lot of sleep, 8 hours. Maybe I'll come to a point where it's like, oh, you can only healthy just to sleep 4 hours of sleep, like Elon Musk. I don't know. So I feel like I'll probably be wrong about health related stuff. Yeah, I'll look back and be like, man, I was wrong about that and that. Because I'm always studying, trying to figure out new ways to optimize health. And then things I'll be right about is I think Tesla being the largest company in the world
hmm.
by 2030. I think I'm pretty convicted I'll be right on that. And I don't know. I think it's hard to say what else I'd be right on. I mean, I'll probably wrong a lot more than I am on right, but I am pretty confident on Tesla.
Yeah,
So,
I
what
like that.
you have anything? You have anything interesting you think you'll be wrong or right on in 10 years?
Wrong, probably everything is probably my assumption that I keep up
Yeah,
with, and
yeah,
I'd probably say most correct. I'd probably say I have the same conviction. It's easy to piggyback off of what you said, but
yeah,
I do think at that certain point, especially when I was talking to my dad actually, and he was like, I was considering selling some Tesla, and I was like, well, Dad, do you think Tesla will ever be $1 trillion company? And he's like, yeah, of course. And I was like, well, then why would you sell, right?
yeah, yeah, yeah.
So, but obviously that's just financial advice you give to your parents that you think you know better. But
Sure. Yeah, yeah,
right on, and we're getting a lot of comments about people potentially trying to reach you. So let's talk about Good Soil,
sure.
how people can get in contact, your YouTube channel, all that sort of stuff.
Yeah, just my Twitter handle is Emmet Peppers at Twitter, or at Emmet Peppers. Spelling my name very simple. Goodsoilinvestment.com is the website. It's really, eventually I'd love to have an ETF set up. Right now we're not there. It's just this hedge fund that has a minimum of like $500,000 investment investors. So it's really for ultra high net worth people. But we do hope to have an ETF at some point as we grow, when we have capacity to build that out, because that would be cool. Anyone could invest in an ETF, then it'd be cool. But you can't do as many complicated things in ETF, like options plays and stuff.
Hmm.
You can do some, but not everything we're doing in the fund. So yeah, that's how people can reach me. The YouTube channel is Good Soil Investments YouTube channel. We have a Twitter handle, Good Soil Invest.
Yeah.
So yeah, those are all ways to reach me.
Perfect. And I'll link those in the description after, so you can check those out there. Right on, Emmett.
Cool.
So thanks, Will. It was great having you on. And if the split happens,
Yeah.
maybe we'll have to have you back.
Yeah, thanks. Hey, one question I have for you. To hit that bid, I think you kind of contacted me a while ago. What does that name come from? Because the first time I heard it, I thought it was like gamey, and I was like, I don't know if I want to go on like a game show. Say like, where does that? Where does that where does that title come from? Is there a unique? It's a cool, catchy, but where's it come from?
Yeah, man, I have such an anticlimactic story for you. I in 2012 I made a Twitter handle about hit the bid, hitting the bid
Yeah,
when you're selling off and you're selling off shares. And I thought it was
yeah.
cool. I was really into stocks, day trading, all that sort of stuff. This is a while ago, I think 2012 or even 2013. And when I wanted to start creating content on YouTube, and predominantly I wanted to talk about Tesla because I was just like you, I was spending all day just immersed in Tesla content, and I didn't have a
Hmm.
name. I'm not creative. I'm one of the least creative people probably in history. And so I had that Twitter handle.
I think I
Um,
beat you on that, but anyway, go on.
I had that Twitter handle, and I remember that name that I came up with in that like burner Twitter account that I made years and years ago. And I called myself originally Hit the Bid, and I made everything around that. And then I started getting comments. I got used to get like 40 views, and I was like, oh wow, look, I'm getting 40 views. And I had some comments coming in like, yo, like you are you ripping off this guy that's like hit the bid? And I YouTube it. There's already a guy who's hit the bid, so I was like, oh man, I don't want to step on this guy's toes. So I changed it to hit that bid. Obviously,
Okay.
a pivoting a branding move. It's branding is definitely my forte. Is what I say
Yeah,
that
yeah, yeah.
sarcastically, but that's where the story comes from. It's
Okay.
just it's very anticlimactic. Unfortunately, I should probably create a better story around that. But
No, it's interesting. I mean, it's catchy. It's certainly catchy. It's cool. I'll remember that story.
right on, yeah. And I remember even when first when I hit 1K subscribers, 2K subscribers, everyone was commenting and messaging me like,
Yeah.
get Emmet on, because I think that was when S&P inclusion was kind of hot and everything.
Yeah.
And I remember
Yeah.
messaging you, and you're like, okay, well, maybe we'll talk in the summer. I was like, all right, let's do it then. So I appreciate you coming
Yeah.
on, Emmett.
Cool. Yeah, no problem. Happy to come on again. I know we had more questions to go over, and we'll do it again maybe when you're ready in a few weeks or a month or something.
Let's do it. Awesome. Thanks, Emmett. Take care.
Cool. Thanks. Take
Thanks,
care.
everyone watching. Great. That was awesome.